We are back in the black hole of real estate, and it's time to talk interest rates. And the Fed just had a meeting, and I want to give you guys the news. This is your host, Ron Wojciechowski, for the black hole of real estate. And shockingly, the Fed did nothing. And I say that with every bit of sarcasm that I could possibly muster up. They have held and held and held and watched and waited and delayed to monitor where things are going. And I wonder if at some point that strategy is a mistake. We're going to find out. But right now they're holding the interest rates right where they are, so there's no change whatsoever. And I wonder, we've got 4 meetings left in this year. So end of July, there's going to be another meeting. And, I really would have thought that June or July would have gotten one of the quarter point breaks in the interest rate, So now, am I pinning my hopes on it? I'm a little, stop short of that. But my belief is they were going to do it one of the two, and they didn't do it this time. So I'm targeting July 29th as the date when the Fed will drop rates a quarter point. After that, mid-September there's a meeting, October there's a meeting, and the final meeting is December 9th. So if you don't see it on July 29th, then it's mid-September, so a couple months from now. Then there's one in October, and if it's not there, all that's left is December 9th. So we're getting down to the last few over here. My suspicion is they're not going to drop it every meeting. I think 2 is what you're going to get. My suspicion is July and October, and I'll wait and see after that. But at this point, we've seen that the real estate market is continuing to move forward without the change in interest rates. And I do suspect that when they do it, there'll be a nudge even further forward. But what we haven't seen is people rushing out to buy properties, making multiple offers and doing things they did a few years ago. But the anticipation of home prices dropping has not happened. And we just talked in this podcast a couple episodes ago where the sales price of homes is actually up in the first quarter of 2025 compared to the first quarter of 2024. So prices are up a few percent. We're not seeing prices dropping. We're not seeing interest rates dropping. We see it's taking longer for homes to sell. But now we're in what historically has been a busier time over the summer. And I'll be curious when we look back in August and September, what did this summer look like? Because it will be on the full strength of the housing market, and it will not be something influenced by interest rates. The earliest we'd see a reduction in rates now is July 29th, which is getting near the tail end of the summer buying season, if you'd like to call it that. So decisions will already be in progress through all of June and all of July. So it would just leave a little bit of August, but again, most of those things would be in progress. So the summer is going to support itself based on real estate fundamentals and a foundation of buyers wanting to purchase, not influenced by the pressures of multiple offers and scarcity, because there's more inventory, and they're not going to be pressured or influenced because rates suddenly dropped, because that didn't happen. And for those waiting for this to happen all year long, it's, for many people, go time. And sometimes you have to move forward, even if the financial incentive or windfall from a lower interest rate in the form of a lower payment, more money in your pocket, isn't happening at the time you need to buy. I do believe a lot of people are going to go ahead and make the move, make the purchase without that. Now, I think we've talked enough about lenders that are offering programs where you can refinance in the first 5 years at no lender charge. There's probably going to be some closing costs in there. But as far as the lending, they're going to waive those. The lenders want the business. And they're doing what they can to encourage people to borrow money to buy homes at the current rates because they don't have a way to process it a whole lot lower than what it is. But they also make money off of this. So I do think the banks will at some point compete a little differently. But right now, my suspicion is they're competing as best as they can because they may be pricing in on some levels. The next price drop, when it happens, might be priced in. We may not see a big change. When it goes this long without much change, you find that the banks start to price that in. So when we do get that relief, and maybe it's end of July, if it's a quarter point, I don't expect interest rates to go down a quarter point, maybe an eighth of a point. But if it's already priced in, there's not really a place for it to go. And I'm not of the opinion they're going to suddenly drop 0.5%, a month or so from now. I think we'll get 2 of the next 4. So if you are attempting to qualify for a home and the interest rate has you right on the line of qualifying or not qualifying for the one that you want, we still have the tools of 2-1 buy downs. And a lot of times the seller will help pay for that in order to get the price that they want. And if you're not familiar with or don't remember, you can type 2-for-1, 2-1 buy down in here and search it on my podcast. But in essence, you get a reduced payment 2% below in the first year and 1% below your interest rate in the second year. And then the third year, you pay the current rate. So if the rate that you're going to get right now is, let's call it 6.5%, the way you'd structure is the first year you pay based on 4.5%, second year 5.5%, third year 6.5%. But by that time, maybe the rates have come down enough where you can refinance and just have that rate ongoing and never ever get to the 6.5% rate, if that makes sense to you. Now, the way that you do that is you take the difference between a payment monthly of 6.5% and you subtract out the payment at 4.5%. It could be $200-$300. You add that up for each month left in the year, and then going into next year until you hit 12 months. Then you take and you just save that number. So if it's $3,000, $4,000, $5,000, whatever that is, push that aside, save that number. Then you take the difference between 6.5% and 5.5% in the monthly payment. Get that number multiplied by the 12 months. Add that to the first one. So then you get the first 2 years of payment saved. And let's say it comes to $7,000. You could ask the seller to pay the $7,000, which is prepaying some of your mortgage in advance. So you could do that, and the seller could pay that for you, and that will help you enjoy the lower payment. Now, let's take a different tack here. Let's just suppose that you had $50,000 in the bank, or even more from that from the sale of a home. So you've got cash. You just can't qualify for the new mortgage payment because maybe you're moving up in the house. You can pay it yourself. And what that would do is it would drop the monthly payment down. That might just help you qualify. Now, I'm not suggesting that either way is a good way to do it. But if you're up against it, because the easier way to do it is just spend less money and not be house poor and not bank on the rates coming down, but get yourself into something where you can comfortably pay whatever the going rates are. If it's 6.5, if it's 7, if it's 6, could you just qualify in that payment, not be house poor, and just spend up to that as opposed to overspending? So we could have some little restraint here. You may not get everything on your house list, but my goodness, if you're looking at $300,000, you probably want what's in a $400,000 house. You look at $400,000, you want what's in a $500,000 house, and so on. The fact is, you can look up to $1 million, and a house probably still wouldn't have everything that you want in it, because every house is missing something. That's unless you build custom and get everything you want, which honestly that could change in a few years too. Get as much house as you can for what you are willing to pay and can afford sustainably long term, and that might just keep you out of the foreclosure and short sale thing that we hear so much about, but we're not visiting upon it because it's not happening very much. 2008 was unique. It's not happening now. It was not going to repeat itself, not for the conditions we're currently in anyways. And even though people are continuing to say, wait till the foreclosures come, it'll be like 2008, I don't believe that. It would take a dramatically different economic event, not the current situation, for that to take place. So much going on with the Fed, even though nothing's going on with the Fed. What I can tell you is I do expect homes to sell at a greater rate over this summer than they did for last summer, and I do expect the prices to inch forward and continue to increase until the time comes when the rates go down, which will, by the way, probably push prices up just a little bit more as well. If you got questions about interest rates, what the Fed might be doing, stay tuned because we're going to keep reporting on this. I would love for you to subscribe, drop us a comment, and maybe suggest another topic. If there's something you want to hear about, let us know. This is your host, Ron Wojciechowski, for the Black Hole of Real Estate.